G'day, guys. How are we doing? Welcome to wonderful. It's not Wonderful Wednesday. It's Terrific Tuesday, isn't it? I'm not sure why I thought it was Wednesday. Maybe I was wishing it was Wednesday. I don't know. It doesn't really matter, except to say that Tuesday, first Tuesday of the month, is always Aussie RBA Statement Day. And apart from that, we got retail sales earlier this morning, as you can see on your screen. Bit of a miss there on retail sales. Trade balance was good, but well, I suppose somewhat predictably, on the retail sales figure, the Aussie started to head south, and I've got to say I got a shock. I was most surprised that the Aussie not only rallied, it skyrocketed on the RBA statement. Why?
What do they say, mate?
No idea. I was just about to swear, but not much.
Oh, really? God, yeah.
Well, it was pretty much cut and paste. I guess the only thing I can think of is that the market was expecting a dovish statement and pretty much got a neutral one. But, it rallied for, wow, it just went nuts. I don't get it at all.
Technical area there, isn't there?
Oh, what, sorry?
There's a technical area that it rallied from.
Oh, yeah, there is. Yeah, true. That's true. But, I wasn't expecting it. Kind of blindsided me. It didn't hurt me at all, but kind of blindsided me. I wasn't expecting that reaction.
No.
But there you go.
Yeah, amazing. Actually, right. It's a pretty. God, that is an incredible move, isn't it?
Yeah, like bang. I mean, there's the retail sales figure there, which you can understand. But gee whiz, I don't really get the RBA statement, and I've read it twice actually, just to make sure I didn't miss something, and I don't think I missed anything. But there you go.
I will have a look into it as well.
Yeah, well, that's the story so far, all about the Aussie today. And as you can see, the Aussie has just gone nuts. Later on, we've got ISM non-manufacturing purchasing managers index, and that's not tipped to be too far off par or off previous rather. And we'll see how that pans out. We've got Kiwis on holiday today. Why are they on holiday? What's that all about? Waitangi Day. There you go. Got no idea what Waitangi Day is. That's a job for Google. I forgot to wish Paul a happy Waitangi Day yesterday.
Happy Waitangi Day.
Happy Waitangi Day, PB. And of course, I was still in Chinese New Year, so those guys still having a breather.
Oh.
We've got, and that of course goes into tomorrow and Thursday. We got Trumpy talking tomorrow. What's he saying tomorrow?
Trump.
Oh, it's the State of the Union address. Okay, that'll be interesting. What? I wonder what lies and bullshit he'll come out with.
That's the thing I was going to say. It's just all of the hot air, isn't
it? Pretty much. And of course, we've also got Philip Lowe speaking tomorrow as well to explain, I guess, why the market went apeshit on the Aussie.
Do you know, mate? I've just listening to some of the analysts about the RBA, and you're actually right on the money. I mean, I don't know why it would do exactly what it did. I guess a technical level, but you're right on the money. It was just that it wasn't as dovish as expected.
Okay, that's what they're saying as well. Yeah, it's the only thing I can read into it, mate.
Yeah.
Which is weird. At the end of the day, and you can say, look, the market's priced in a dovish statement, but at the end of the day, I thought the Aussie was under a little bit of pressure anyway. Coming off this high head and shoulder, lower highs, lower lows, lower highs, lower lows. Maybe that's where the market was thinking dovish statement, well. I guess when you look at it that way, that's exactly what's happened. The market started its dovish tones here, and guess where we've gone back to? Right there. That's how I'm reading that. I still think the Aussie's under pressure. If I was scalping, I'd be very keen to get into this short.
Yeah. Yeah.
And I'm not dismissing that today in any way, shape, or form. So I'll be taking a good look at that. So that's pretty much the news of the day, mate. Not too much happening. Anything happening on the Brexit scene? There's probably bound to be something.
Well, I mean, there's a couple of things, but I mean, mainly it's just Theresa May going over to Ireland to try and convince them that that she should have her deal. I suppose most significantly is the fact that she's just not giving up on this, and it's I have to, I find it really quite frustrating.
Still, getting worse and worse.
It's and you know, it's because there's just no bending. That's the thing I find so difficult. So Theresa May saying she can get broad support for the deal. She's in Northern Ireland today, where she's going to tell people that she can reach a Brexit deal with the EU that avoids creating a hard border with the Irish Republic. In a speech, the Prime Minister will insist that she can renegotiate with other European leaders and create a solution that commands broad support and get it through Parliament. So she's obviously spoken to a lot of her backbenchers about the way forward and how she's going to get that support, and maybe some of them are buying into it. On Monday, Chancellor Angela Merkel said the EU would listen to ideas aimed at solving the Irish border riddle, but the UK had to put them forward first. With Brexit due to happen on the 29th of March, a working group of Leave and Remain MPs will meet for a second day today to look at suggestions. They've got one more day of meetings. So, as I say, obviously after day one, she's probably quite happy with the potential sentiment that's in that room. Why the EU is digging its heels in. So there's a little side report on that, but generally speaking, it's if we are to read between the lines, which is all we can do, it suggests that maybe Theresa May has got some support in Parliament, and she will be looking to push that forward and go to Northern Ireland and tell them what that support looks like. The FTSE futures have really gone some distance, I have to say. Much further and more maybe a little unexpected for me. You know, when I look at these futures here,
so we're having a day of unexpectation.
Yeah, I mean, it's not completely unexpected. I suppose I wasn't really anticipating a move like this. I was really looking for the market to break down so I could get in down here to the upside, but it continues to grind its way forward. It's coming off a little bit today. And when we look at this particular chart, this looks like the area that would need to break down for us to get some significant downside. But it's starting to look a little bit of a tricky trade now, because when we switch the dailies, and I'm kind of happy to ignore it, but it's early enough in the month for me to not have to, you know, look and chase this market, because it will settle down at some point in the right way. But I'm going to show you the quandary here a little bit. So when we look at this on a daily chart, now the daily chart's the significant one here, because the breakout it's broken out of a few different areas, a few different channels. Obviously, it's broken out of you know, I could draw a trend line here, but that one's not now significant. This is the significant level. So that now suggests coming back into an area along here. Now, the first point of call is going to be probably yesterday's low. That seems to be I mean, it's about 60 pips below where we are. So a pullback to that point wouldn't be too bad. This 4-hour chart is incredibly oversold. Now I'm going to bring that previous trend line in as well. This is kind of an intraday trend line, and this is starting to look, you know, fairly likely as a potential bounce point. The question is, will the indicators unwind enough by the time it gets down here to make it a possible trade to the upside? And as I said to you before, I am prepared to look for downside, but only if I get a decent looking setup at a decent looking area. And I'm not sure whether I am going to get something that would be lucrative enough to go short, because really it's got to break down. So switching to the hourly now, and there's another line here. That's the final line really in the picture. So if we switch to that hourly, there's not enough room between this point and this point to really take a lucrative trade. So you know, I've got to kind of ascertain where the pattern is, and that looks like a pretty good one, because that looks like there's a channel there. So I think trading inside this channel is going to be tricky, because from where we are now to the low end is only 30 pips. By the time we've got through that point, it's only going to be another 20 pips. So it would have to break both lines for it to be worthwhile.
Yep.
Now that would be okay if there was a daily bar that would suggest some sort of reversal, but that daily bar really now needs to form. So you know, yesterday's bar was bullish, which suggests that there would probably be some further hanging on here. I haven't really got, if I think about the macroeconomics of what could be going on today, still the Trump and Xi Jinping meeting is a driver. The announcement that you've highlighted from Donald Trump is a driver. So there's a couple of drivers that could come into the market, but it doesn't suggest that we're going to get a decent swing to the downside from this point. And what are we picking here? You know, why would it turn at this point? And I don't have a reason. You know, that the point I would suspect it will turn is if it breaks down below this level, which means I'm going to have to wait for some trend lines to be broken, or I see it grind forward and look for it to break down at this level. So unfortunately, I'm in no man's land. You know, it's one of those sort of situations and scenarios where there is money in the market, as there always is, because there's movement, as there was yesterday. But that money is not the easiest to make because of where we are. For one, you know, we're in overbought territory up here on some of the shorter term time frames. The daily's not too bad. It's got a tiny bit more room. But by the same token, we're in an uptrend, and a pretty strong one at that. So really, there's not a whole bunch that I can do safely. I can't jump into the downside, because overbought could get more overbought and embedded. And for it to change polarity, there's going to be, you know, some significant price action to the downside, and I can't go long at this particular point because we are overbought. You know, so I think the only play that I can make here is, as I say, if it starts to break down and it breaks down to this particular level here and holds, and the indicators unwind a little bit, then I can consider a long. You know, I can consider a long somewhere in this area or this area. I can consider a long, but those indicators have to unwind. Now, there's probably enough there's enough room between this point and this point for those indicators to unwind. So you know, there's still a possibility that that the longs on the table. Have to be careful of the
big enough retracement, you reckon, to there?
Yeah, there would be. Yeah, there would be. Do you know what it's going to always depend on? Is what the velocity is. So you know, for these indicators to unwind, it needs some velocity, because really the grind forward yesterday didn't really move them. You know, they were fairly flat, which meant that yesterday was a difficult day to trade. The only possible scenario yesterday would have been to try and take this particular bar here on the hourly. But when we look at this on a 15-minute chart, that's way too vicious. These V-shaped recoveries are just notoriously tricky to trade, and I don't particularly like them. You know, it's not they don't provide very clear pictures or opportunities, because the market could just drop down here, drop back up, and drop back down. But you can see that when it went through, it just kind of dripped through. You know, it didn't
smash through.
It didn't smash through, and then it didn't retrace. And you know, the only I guess the only opportunity for a retracement was this kind of bull flag area, or this bullish channel area. But by that time, there's not really a lot left. You know, it's
yeah, the move's over.
The move's over. The retail traders are kind of trading in this area, and you know, we know we want to try and be on board, or certainly if you're a trend trader, you want to try and be on board with the pro money. You let the dark pools kind of get things started, and then try and be on board with the pro money. But I would suspect the pro money is probably somewhere in this little area here, and then the retail traders kind of kick in and just finish up. And this is the first bar of today. So you know, even if you did manage to take a trade yesterday, by the time it would have closed, there would have been very, very little in it for probably what would have had to been quite a large risk. So a difficult market, I have to say, mate. It's not a chart that I particularly like, and it's not because I don't see volatility and potential movement. It's more the fact that I'll be trading this to the downside because it's overbought, but that doesn't go with the trend, so it makes it a very difficult trade. You know, if it was
it's high risk, low reward.
Yeah, if it was shackled, if it was caged up a little bit, you know, on this line, going short would have been fine, which is what I did a couple of days ago. Going short would have been fine. That would have been an option. But now that option's kind of diminished fairly significantly for me. So I don't know what kind of day we're going to get today, but I'm going to have to see if it unfolds. You know, in a way which is palatable and digestible enough for me to trade. So we'll see how it goes, but I'm certainly looking for a bit of an ease back down to this level at least today.
Okay, shall we take a look at some currencies?
Let's do that.
We'll start off with the highlight of the day, or the headline figure of the day, which is the Aussie, of course, at this point. And we'll get over that blank screen. Can you see my screen? Yeah?
Yep.
Okie doke. There it is. So, yeah, I'm kind of glad in a way that this has done exactly what it's done, because it's kind of playing into my hands a little bit. I'm seeking a short here, but I was seeking a significant lower high based on this reversal bar, and a weekly pivot bounce. This is exactly what we were looking for yesterday, but yesterday turned into a bit of a fizzer in terms of tradability, so there was no trade to be had. And now that news reaction, or the reaction to the RBA statement, surprising as it may be, has done exactly what I wanted it to do. It's taken price back into the area where I'm looking for a short. So a few options here. Obviously, I'm going to trade the daily bar now, but I reckon there's some opportunities on both the 4-hour and the 30-minute time frame. So forget that bar. I mean, don't forget it. It's still there, but forget trading that bar. It's not going to be possible. But what I'd really like to see is price now break this trend line and find this horizontal level here, which is around about 70 to 70 mark, and then work its way back underneath the broken trend line, retest it from below, and I reckon I've got a decent trade short. Even if we get down to this level here before we enter, there's still room for profit before the pivots, and I do like that quite a lot. There could even be a pretty special trade, if you like, on the 30-minute charts. What I mean by special is the reward to risk here would be pretty decent. So same scenario, let's break here, get back below it, retest it. So if we can enter, say, here somewhere with a risk of about 10, 12 pips, there's a nice little 2-to-1 trade on the, I believe anyway. So that's what I'll be looking for. I'm hoping I get the opportunity and it doesn't just go very quickly down without any warning. So yeah, look, that's the best case scenario to set up that way. Would I risk something else is the question. Not here. I won't trade a low test bar, high test bar back to back, but maybe if we get back over here and we get a high test bar, maybe worth trying. We'll see. But I'm hoping this will break so that we actually get the opportunity to trade what I call a false break of this trend line. Why would I want to do that? My goodness. Just hang on 2 seconds. That person wants to talk to me urgently. That's about the third time in the last 15 minutes.
You want to take it?
No.
Oh.
Can't get people in the habit of talking to me when I'm working.
No, very good point.
And I mean, anybody who knows me knows that I work at this time of day and have done for the last 100 years. So, well, you know, 10 to 12 anyway.
Yeah.
So, look, this is all fitting into place for me. I think this is probably a decent opportunity. And as I say, I just hope it doesn't go without me because I am keen to get short here. That is the Aussie coming off the top of the range, back into the range, and I'm just looking for a nice setup to trade it short. Cable, not as easy. Definitely not as easy, primarily because of the fundamental influence that we are under and have been for quite some time. But if I look at this chart, I'm a little bit confused. Confused because we've come off the top here, but really, you know, without a nice clear reversal pattern. I'm on a 4-hour chart here. Let's go to the daily. And that spells it out more so for me. Is that a pattern for you, Ash?
What were we looking at? What currency pair is that?
That's cable. I would have thought that if that was to be an evening star, you'd want the high above this high, wouldn't you? Wouldn't you want that to be a high?
Is that a daily?
That's daily, yeah.
Yes, you would actually, yeah, but that's still a very interesting pattern. I mean, in some respects, the kind of the technicalities of the name, yeah, I mean, it's not an evening star, but it certainly does express weakness there. You know, when you get that that inside bar or the harami, and then you get a bearish bar which closes right at the lows of the previous bullish bar. That does, you know, that's expressing that there's some pretty significant weakness in that particular area. Let's see who's involved here. I mean, it's almost a bit.
I mean, don't
get
me wrong. I'm pretty cool with it because it's exactly the same as the Aussies, coming not right off the top of the range, but you know, I could easily tighten that range up if I wanted to probably this level here, which is where we are. So we are back inside that range, and a significant lower high here would get me interested. In particular, if price were to get back to the weekly pivot here and give me a reversal bar, I think there's a nice trade on back to the monthly pivot as well, and an extension down to the bottom of this range. So I'm certainly not against it in any way, shape, or form.
Yeah.
But but I've got to have the retracement before I can get in. Maybe that was it there. You know, maybe that was the. Is that why maybe I did enter there? I was in a pound short here at some stage. What happened? Can't remember. Your retracement might have got me at break even. That was only last week. What's today? Tuesday, Monday, Friday, last Thursday. I have to go back and have a look. I can't remember that trade. Well, I'm out of it now. I know that.
Yeah. I mean, I stand by my opinion of the pound. I still think that the thing with it is that the market is obviously pricing in a soft Brexit. You know, that's really what's kind of been going on here. But I stand by my opinion that that there is still another twist in this, and it may well come later in the picture. You know, when the next vote goes through, maybe it comes in then, but it doesn't look to me like that the pound is going to show signs of strength in the near term. So
not on that chart, no.
And not on that chart. And I have to say, not on the euro either. Not against the euro either. I still think there's probably some grinding up that that the euro could do against the pound. So I'm not particularly bullish on the euro because of what's going on in the eurozone, but obviously, the dollar has to come into play with this, and I'm not particularly bullish on the pound right now either. But unfortunately, what could end up happening is that we just kind of we grind down and then hold rather than break. That's the danger, isn't it? That you kind of end up in a kind of low volatility environment with the pound just while we wait for some new data to be released.
Yeah, look, I'm pretty cool if it continues to do what it's been doing since the second half of last year. As it comes off highs and gives me a lower high, then you can trade it. Comes off lows and gives me a higher low, then you can trade it. Ditto. Ditto. It's not that hard if it continues to do that. You just got to be in the right place at the right time. Maybe that was the right place at the right time, that bar there where I've got in, obviously, last week. And quite frankly, I can't remember the trade. But obviously I'm out of it now. I have to go back and have a look at it.
Yeah, I mean, is the pound something you're going to be considering today, or not really?
Yeah, definitely.
Yeah,
but it needs to do a fair bit of work before I can get into it. It's got to get back to here, or at least this level, and give me something like that off resistance. If I see that, then I'm in. Down to monthly pivot in the first case, and then extending down to the bottom of the range if can. So that's where I'm at. Is it worth trading long to the weekly pivot is the question, I suppose. On my lips, not from here, though I do like this. I do like the big bullish engulfing bar. There's, I guess it was there already, wasn't it? We've already got that higher low. So that would have been a trade straight to the daily pivot. That's kind of almost there. A bit of very small candle, but nearly 2.5, nearly 3 to 1 on that trade. If you're prepared to trade those, I wouldn't trade that. That's just the wrong time of day for me to trade. And the candle's tiny. I've got a high test bar, low test bar combination, and you would have had to wait 1-2 hours before you actually got on the right side of this. So that, and that's why I can't trade at that time of day. It just drives me mad. I can't do it. And then you would have moved back here, without any profit in the bank. It's just too hard.
Yeah.
To trade under those conditions, and that's why I don't do it.
This is the thing, isn't it? As you always say, it's not obligatory to trade, and when we're starting to see these tricky markets, which I do see a little. Yesterday was a bit difficult. I find today quite difficult to digest as well, and I think it could well be one of those days today.
Yeah, look, I'd be okay.
Maybe one of those weeks.
Well, it may well. We're Chinese New Year. There's a bit missing out of the general population, if you like, of traders. But when I do see something like that, I'm always looking for a secondary. So I'm looking for a confirmation that these bulls have actually got the right sniff. I don't see it here, as I said before, but if I got a daily pivot test and then a nice obvious swing here and a higher low, that would interest me. But I'd like to see the daily pivot broken first. So break here, swing back down to here, give me that higher low in this area, and then I've got a target up here in the weekly pivot. So not against that at all. Long to get short, no problem. But I've got to have the right information in front of me.
Yeah.
Let's have a look at the euro. I'm liking this. This is good. I'm exactly the reverse on the euro in terms of Aussie short, pound short after long. I'm euro long after short here. I can't go short now, nor did I really want to, but I like the fact that we've now broken these pivots. Pardon me. Exactly the same thing applies. We've got a big bullish engulfing bar. We've had a rally, and now I'm looking for a higher low again. So if I see that best area, look, I suppose here. Anywhere here is fine. 113.60 is not far away either, is it? That's my all-time level. Or I got in back over here. That might upset me a little bit. But I'm anything in this area that gives me a reversal signal, then I'll be looking to trade this long. So that's doing exactly what I wanted it to do. Nice retracement. Do I need more information? Let's have some more information. Yeah, it's this zone. It's this zone I want. Let me look at that from the other way. Yeah, we can get good targets out of that, I think. Anyway, I'll keep you posted on that, but quite keen to find that higher low. So the Aussie, the pound, and the euro are all of interest to me.
Yeah.
What else?
FTSE's just opened up and it is spiking.
Is it?
Yeah, I'm tempted. I'm really tempted to get in short here. The problem I've got is that yeah, she's spiking around. When we look at this on a 5, it's spiking around here. I'm really tempted to get in on the short, but the problem I've got is that the setup is just not there. So if I consider my factors of why I get into markets, then the fundamental driver is the first thing, and
yep.
I don't really have
anything.
Can
you give me 2 minutes? I've just got to bail out for 2 minutes.
Yeah, you go for it, mate. Yeah, well, I'll let me just show you guys what we got here. But this is spiking around, and it's not a bad area in a way. Just if we trust the retracement, that there will be a retracement, which I think there will be, and it's one of those that sometimes you just get a feel of a market. And I've been trading the FTSE for such a long time that my sense is moving me towards just some bearish price action, but nothing really significant. And because of the bullish sentiment, and also because we haven't really hit a level. When we look at this on a daily chart, we kind of we got a little ways to go before we hit anything really significant. If we move the bar onto where we currently sit, there's not really anything here. Let's look at this on a weekly as well. Not really. Maybe a line over here, but it got so scruffy around this point that it's going to be very, very difficult to rely on and trust. So, my feel is that we're looking for bearish price action. The only reason that I would trade at this particular time is that the market is just opened, and oftentimes trends will start as the day starts. So we have to really drill down to the 15 before we start to see that we've probably hit a lower low and maybe a lower high here. So my sense is that we move down, but the professional in me says there's no setup, and the drivers aren't really clear enough to suggest that the direction will exist and will continue. Now let me just double check the news here. Yeah. So interestingly, what the actually quite interesting yesterday. One of the reports that I read was that the stocks that are doing pretty well are the defensive stocks. Oil had a really good boost up yesterday, and that really dragged up some of the oil related stocks in the FTSE 100, i.e. BP and Shell. But it's things like the United Utilities and some of the healthcare stocks that seem to be doing well, and maybe they're the stocks that are driving the market forward. So because of that, defensive stocks really suggest that the market move to the upside is weakening. So when we kind of like take that into account, that does suggest some downside. Now, interesting bar. This is a really interesting bar. We don't read too much in it. It's not a high test bar. It's not a shooting star, but because it's the first bar of the morning, it does start to suggest that that actually that weakening will come in. So, my position and my feeling and my view is that we ease back down again. But I've got pretty weak technicals and weak fundamentals that go on it. All I've got is a general overview. Now, this is one of those that you can predict the right direction, but you're not really missing the trade because the other things just don't line up. Money available in the market or not. If there's nothing, if the big picture just isn't quite lining up, then these little bits of detail really have to be swept away. Have to be swept aside. So I can't really do a lot here, but I do think, as I say, it's quite interesting that the stocks that have been pushing this forward have been defensive stocks. Now,
what does that mean, mate? Defensive stocks? You mean
stocks. Defensive stocks are stocks that if we were looking for low returns, so safe returns but low returns,
okay.
things are always used. So when I think of stocks that that maybe people that would probably want the bulk of their investments to be in, it's things that you can't do without. You can't do without healthcare. You can't do without electricity. And I suppose until they have different forms of electric that come into play, then those particular stocks will always be around about flat, which means that they're always going to be able to pay a dividend. There's not going to be a great deal of growth because there's the growth in those markets don't really exist so much. Healthcare. And even healthcare, you are still looking at specific healthcare stocks. If you manage to find a market or a company that is looking to invent the cure for cancer or baldness, let's say, that they're going to make a whole bunch of money, but there's a race for that, and you might pick the wrong one.
Yeah, it's a pretty crowded market.
Yeah, exactly. But then there's other kind of more aggressive stocks that you would probably want to look towards. I really like the way that Lloyd kind of thinks of this stuff. And I was reading a really, really interesting article yesterday about a stock called Games Workshop. Now, I've avoided retail stocks because the high streets have pretty much collapsed in this country.
Mm-hmm.
But there is a stock called Games Workshop, which all of a sudden just started to fly, and this is the really interesting thing, and this is well worth people that are listening to the show going out and trying to change their mindset into think, how can I find the next big thing? Now, when I say that, I say that it's the same as Bitcoin, it's the same as this Games Workshop. What we are looking to do is allocate a very small part of our portfolio into those areas. So people will move their portfolio around. When markets are a little bit tenuous, then you will see more of their portfolio go to the defensive stocks. When markets are starting to be buoyant, then you might take more of your money out of the defensive stocks and start moving them into either mid-range growth, or possibly you might take more of a punt on some of those companies that could really smash it. You might go and pick a small oil company with the hope that they find they manage to discover oil, which means that their particular stock will fly. But there was a really interesting article. So Games Workshop is effectively, for want of a better word, it's for geeks. It's for people that like playing things like Dungeons and Dragons or Warhammer. Have you ever heard of these games?
No, mate, but my son would be all over that, I would imagine.
Yeah, he may well. I don't know how geeky he is, but he may well. I'm not that geeky and probably not intelligent enough to play these games, or patient enough, because these games involve models, really intricate models, and then they go to war. You play against other players that they buy all these They buy all these different models, and I guess it's a role-playing game. So maybe there's some cards that come up, and you go to war against some other people with these really the intricate models. Now that in itself is quite a solid industry and a solid company, because it's one of those that's a bit like heavy metal, that will go in and out of vogue, but it will always have a solid, dedicated following. These kind of these shops in these games have got a dedicated following. If you're that kind of person, you're going to buy the next model that comes out. You're going to turn up to these events because you find like-minded people where maybe in general society that you don't.
Are you talking about those games specifically, or just gaming?
Those games specifically.
Yeah, right.
Okay. Yeah, gaming, I guess, is, it's on so many different levels, isn't it? There's people that play it.
Gaming is just unbelievable.
Yeah, but these games specifically are actually physical games. They're not on the internet or on the computer. They are physical games that you go to a place and take your armies along, and have these huge events. It's the kind of thing that would fill up an exhibition, an exhibition building, and people would go and exhibit, and so it's very niche. And very, very, very loyal. The people that go there are very loyal. But what's significant is when something that is released happens that links to these toys. And in 2016, maybe before that, actually, maybe slightly before that, it had this huge spike. And when you look into it, the reason it had a huge spike is that they managed to get an ARM and a deal done with The Hobbit and Lord of the Rings films. So all of a sudden, you've got the core people that are interested, and now you've got the new people that are, starting to come into the game, get that particular gaming environment because of Lord of the Rings and The Hobbit. And it's that kind of thing that we are effectively looking for. What's the next thing that's happening? You don't have to find the next Bitcoin. You can just find a Bitcoin within a company,
Yes. Something that's a derivative, basically.
Yeah, and if you know that there is a company that is being released. Sorry, there is a game that is being released. Then that's when you start to go and see if you can find a company that makes toys for the game or makes toys for the film or whatever. But this is only on Yahoo charts, but you can see that this is the area that it started to really spike, and that was down to a deal that it had done. Now I know Lord of the Rings was released way before, but I think they only managed to get their particular agreement done around about this point here, so it really started to pick up. And I guess you'd probably find the same with something like Lego. When Lego managed to get the Batman franchise and the Star Wars franchise, I'm sure their share price would have gone through the roof as well. So, so what we're looking for really is to keep our ears on the ground. The other day we were discussing the floods in Brazil. Now we probably weren't absolutely on the money, but there's something to be said for the fact that then you are looking for things that do have some sort of connection with iron ore, and the Aussie probably had some sort of connection with iron ore. Now it makes it a lot easier if you've got your finger on the pulse with a specific industry. If you know a little bit about the Games Workshop before something like Lord of the Rings is going to be released, you're probably going to be a little bit more aware that may happen. But we can all kind of keep our eyes and ears out and not have to worry about it being the next really huge public announcement like Bitcoin. It can be just a spike within an industry.
Yes, like the climate is one obvious thing to look at, and if it's going to rain for 40 days and 40 nights in a certain area or wherever, then you're probably looking at buying raincoats, or you're looking at inflatable boats, or those sort of offbeat things that you wouldn't consider normally, but you can see that there's going to be a spike coming. There's big drought in Australia at the moment, and has been for ages. So the price of wheat in Australia, you would think, would go through the roof because nobody's going to have any. Those sort of things. That's what you're talking about. Yeah.
Absolutely. Yeah. Like corn. You might sort of like find that if there's a drought, then corn. And look at
that first candles meant nothing. Well, look at that.
Wow. No, interesting, isn't it? Interesting. And I suppose this is the thing about making sure that it just doesn't matter sort of what we think we know, that the market will tell us, or the charts will tell us what we need to know. I still suspect this will probably drift down at some point, but it's the timing, I think, is the key here. Whether this drifts down or not from this point and makes me right about the move to the downside isn't the relevant thing. The relevant thing is it really does become down to a timing play. The timing just from one 5-minute bar doesn't express it, and as I say, the big picture didn't express it there, and it could end up going higher. The fact is, it could end up going higher here rather than coming down, and particularly where we are. We're in no man's land here, really. So there's still going to be buyers that are interested. Now, I don't mind that in some respects, because I'd almost prefer it just to push up here without challenge, because it just gives me something to do. If it pushed down first, I'd have to make a decision if I want to go against my overall view of the market, but my overall view is still bearish. So I'd like it just to drift up a little bit further, and then give me a chance to go short. Still 120 pips, maybe 100 pips away from that particular scenario, but that certainly could happen in the next couple of days.
So what happens if you do get to those highs of the consolidation? Would you be expecting that then to consolidate or tank?
I have to say, my anticipation would be a bit of a tanking. Now it's going to depend obviously on certain factors, but I wouldn't really be looking for a market to push forward so unchallenged to just consolidate. I would look for a market to move forward fairly unchallenged, to then drift back, or not drift back, but yeah, pretty much tank fairly unchallenged, at least until the last hold point. Maybe back to this area here. So I'd be quite happy to take a lesser signal at this point, because even if I'm wrong, I would be very, very surprised if we then move forward without at least coming back to challenge the area, which means I could get my trade off the table. So I'm happy effectively to almost, it won't be quite as bold as this and quite as unscientific, but I'll be almost happy just to put in an order here and just say, take me short at 71.20. So if it starts to push forward, just get me in the short. But what I will do is look for signals that wouldn't be strong enough to get me into a regular trade. I'd be quite happy just to kind of go, it's here, there's a signal, I'm in. And then see what happens, and then hedge it just a little bit higher, just in case there's a little explosion to the upside. But what it will do if it moves up here is not only change the fact that the 4-hour and the hourly are overbought, but the daily is going to start looking overbought at that point, and maybe even the weekly. So when you start to get those particular factors all into play, it would suggest that certainly to me that the market is just a little over exuberant, and I'm not too sure on what. I mean, we know it's to do with the Powell and how the Fed is getting a bit more dovish, but I'm not sure what else. I mean, I'm not sure whether we're getting a boost today because there is an anticipation of what Donald Trump will say. I'm not 100% on that, but I'm quite happy to let it go. I mean, as I say, it's only the 5th of February. There's plenty of chance and plenty of time to make money out of this market this month.
You have a good look at oil when you're looking at the FTSE as well. So
yes,
put in a very interesting bar yesterday in response to the bar on Friday, which was a big bull bar, but it hit the top of a range and a strong horizontal level.
Yeah.
But yesterday's bar is suggesting that bull bar's got a fair bit of merit in it, and maybe we are going higher here.
Yes, well, we have been looking for a reversal in oil. OPEC seems to have cut some production down. again, this is kind of almost gone fairly unchallenged, and it may well have some more room to the upside, but I would be looking for something to come down. But it's interesting as well. I think that that the start of the year has really garnered some really good support in the market, and that may be to a degree what it is. People were just waiting for last year to end, and let some of that flushing out just happen. But maybe they're looking for just a bit more positivity this year. Particularly if the Fed are willing to hold back on interest rates. Where do we put our money? And it's much more likely we put them back into stocks and shares. And it might be the middle of the year where we start to see maybe some of that tightening going on again. That we see these stocks drift back a little bit, but. It's early, isn't it? It's early in the picture, and it's early in the game right now. I think there's just possibly some start of the year exuberance going on, rather than just this being based on fundamentals.
Well, without doubt, stocks have rallied big time off those lows of when was that? Pardon me, just Christmas time, really, just on Christmas time. How big a rally has that been? That's been massive in terms of percentage. I don't know.
Yeah, absolutely, mate. I mean, the FTSE has rallied 400. So that's 5%. There's been a good 5% plus, maybe 6% rally from the lows in the FTSE. So and that's in effectively in the space of a month. So there's a lot of positivity that's going on, certainly as we start this year, but I just don't know where it comes from.
Do we see new highs in 2019?
I don't think so. No, I have to say I don't think so. I still think this market is under a little bit of pressure, and this is the difficulty I think that we always have, is that picking a direction, in markets can be hard, because there's so much hijinks that goes on with these companies. Effectively skewing their numbers. That they are able to skew their numbers and make it look like things are much better than they are. But we've got to think about the Donald Trump effect and the trade wars that have been going on. I'm not sure whether we've seen the last of that. They're talking now, and they're talking about cutting back on some of these tariffs, but it only takes Donald Trump to get a bee in his bonnet about something for things to change again. And have we really seen the result of what happened last year, the government shutdown and all this sort of thing? But it's no different to the Greece scenario. That's very, very clear in my head. The Greece scenario just seemed to just disappear, like it was never there. When it came down to the euro. So these things can happen, and you can miss a rally because you're still looking down. And I'm fully aware of that. And I'm not saying necessarily that when I say we tank, I think the move to the downside is going to be quite swift. But I'm not necessarily saying that we take out the lows. I just think that we're going to get some significant pullback again, and then maybe we start to look for upside. But and it's just because it's just been on a pretty solid bull run. But as I say, you can easily miss these rallies because you're looking in the direction that it seems most sensible because of the news and data. But
and I think everybody. Well, that's a very sweeping statement. Let me say, a lot of people, myself included, have still got in the back of their mind that this has gone way, way, way too far, and there has to be a major correction. Exactly. That's still an I don't know if it's a cloud over the markets, or it's just an underlying theme that seems to be running through my mind at all times. This can crash at any moment. Yeah, it hasn't, and we've gone 10 years plus without that taking place.
Yeah.
And then you start to think, well, okay, the longer this goes, the more likely it is to happen, and there's just that uncertainty around it. I wish it would flush out,
yes,
so that we could actually get on with with a positive outlook, if you like, rather than a very clouded outlook.
Yeah. Well, this is it, and you know that the difficult
and the same
thing,
goes for currencies, aka Brexit.
Yes, yeah. I mean, the pound's has had a really good flush out, hasn't it, because of Brexit, and you know, when I'm sure that's going to be the story of the year, certainly this year and probably next year as well. The bull run on the pound. I'm sure that there's going to be some significant moves in the pound in the next couple of years when they eventually clear the dust on the whole Brexit scenario. But this is the thing about these markets, and you can analyze sentiment cycles, business cycles, market runs, market retracements, market recessions from previous, but every single one has a different driver and a different feel about it. I mean, I don't know a market which has had interest rates that have been left so low for so long. You know, promoting the move to the upside, and it's almost based. It almost feels like the move to the upside is based on something that is a little untangible, because
well, I think that's very much in line with the reason that we found ourselves in that position anyway, which was the I've even forgotten its name. The global economic, what was that called?
Yeah, the financial crisis.
Yeah, no, of course I haven't forgotten its name. The GFC. So the reason we were put in that position has really not happened before. It's unprecedented that that the major financial institutions around the world could collapse just overnight on such a domino effect. And you know, when stock markets have crashed in the past, it hasn't been for that specific reason. And the tendency now, I think, to actually come back from that has been so prolonged because nobody's really known what to do once they got to a position of, okay, we can stop this, but how do we now get back to a flourishing economy that's got inflation at the rate we want it at, and we can still lend to people. But hang on, can we lend to people? Well, really, we're not supposed to be, because they can't afford to borrow. You know, there's all those sorts of things going on. And from what I don't know what's happening internationally, to be fair, but the resonating theme that you get is that we haven't learned a lot by that, and we're now still lending. And I know we're not doing it in Australia because the credit facilities now are way tighter than they were before, and you would like to think that's the case around the world, but I don't know it is. So you know, are we headed back in that direction, or are we not? I don't know. I have to have an economist that's far more into it than I am.
Well, do you know what, mate?
Even sort of questions are in my head.
Yeah, but on that, you could ask two you know, more than qualified economists, and they'll come up with a completely different answer on that stuff. Yeah, and that's the problem with economics, isn't it? It's still based on opinion. And
as in all things, you know, the value of all things is on opinions, isn't it?
Yes. Collective, isn't it? Yeah, you get a collective acceptance in the end, which puts the value of something as where it's at. But you're absolutely right. You know, my opinion is that the world is in a difficult position, and I still think that we haven't really seen the full effects of certain things, but the market isn't expressing that. And the truth is that it's still about timing, isn't it? I don't know. Have you ever seen the film The Big Short?
Yeah.
Right. I mean, you know, the guy knew what was happening, but it almost collapsed on him because but the timing. Almost killed him. You know, he's there going, what's going on? But the market continued to move in a almost in a random direction, but eventually when it came, it came down like a house of cards. And I suppose that's what it comes down to, doesn't it? And it's a little bit you know, back to Greece and the euro. If the euro was to collapse, I don't even think that we would be able to blink for it to happen. I think it would just, the eating away would go. It's almost being eaten from the inside out, and you don't see it happening because the market continues to buy things up and have a buoyant sentiment. But then all of a sudden, the absolute catalyst happens, and it will just break. I thought it was going to be Greece. That didn't happen. I was saying at the time, I'll be very surprised if the euro zone survives this, and it did. Now we've got Italy, and I've just been looking at a chart that was showing the Italian debt. Some of the exposure to the Italian debt. The Germans have got quite a lot of that debt. The UK's got around about 17 billion, I think, but the Germans they account for about 53 billion of Italian debt. So who knows if that again, that hasn't been reported on for a little while. What's going on over there?
I can't believe that the Italian situation isn't headline every single day.
Yeah, me too, mate.
They want Macron's head on a platter. It's just amazing.
Who the Italians want Macron?
Yeah, they've been rioting in the streets for months.
That's the French.
Sorry, the French.
Yeah.
Not the Italians.
I mean, that could be a headline as well.
There's something happening in Italy as well, but no. Yes, I was on the French thing. Sorry.
Yeah, that's right. Well, I mean, do you know what though? You don't. You're absolutely. I mean, it's still sort of like a European story, isn't it? But I don't know. I suppose it's one of those.
But when this happened in Greece, I mean, it was all over the place.
Oh yeah.
No matter where you looked, and the poor Greeks, they just shut their money supply off.
Yeah.
And I don't know if this is. I don't know why they're wanting Macron's head on a platter, but I don't know that it's a similar situation. What is the situation
there? Do you know what the story in France has it kind of passed me by a little bit. I know there's certain things that they're not happy with.
That's what I mean. I know they're riding in the streets, but nobody's really talking about it.
No, I can't even remember what it was about. I'm a little bit more aware of the Italian situation because it's actually.
So what is the Italian situation? Fill me in.
Well, I mean, the Italian situation really started by the.
Before you do that, we've got new candles. I better have a quick
look, eh? Let's do that. Yeah.
See if there's a trade. I'll see if there's any French Italians in the audience.
Yeah.
This is annoying. There's my little scalp, eh? We could have scalped here and gone for no risk. 15 pips out, done. We'll have to turn the scalpers, Ash. So there's no trade there. Oh, pound has come off, and that is good because if I get my significant higher low here, there may be something on. Certainly that candle's no good to trade. Can't trade it. Ditto euro, but perfect. This is exactly what I was looking for. So we're now in the zone. I'd like to see just a little bit more. I'd like to get down to here. And then I'll be looking, well, I'm probably looking for longs now, but anywhere down here, I'll definitely be looking for longs. How am I going to do that? Okay. It won't be easy, but it won't be impossible either. We could use that. We could use... That one's going to be way up here. I won't be using that. We could use... that there. Okay, that's probably where I'm at. This is a nice area. So what do I need to see? I need to see a reversal bar. I don't really need to see a reversal bar, but I'd like to see a reversal bar or a double bottom or something of that nature to tell me that there is the chance that we will reverse here. Then I'd like to see this area attacked and a nice higher low. Then I'm in. But I would really be willing to take more than what I call acceptable risk on this if I saw even a reversal bar sitting in this area without the reversal here. So, you know, a low test bar sitting on that level, I'd be willing to go for it. I'd be willing to play a false break of this line. I'd be willing to play a break and retest of this area. Anything in here would really get me interested long. So that's pretty cool. Liking what I'm seeing on the euro. There's a chance later. Aussie yen, again, similar to the Aussie. I'm looking for a way in here to get short, but it's not there yet. Again, I don't see a reversal bar, don't see a reversal pattern, so it's not that easy. I'm probably looking at a different Aussie cross to trade by looking at that chart. Pound yen. I haven't got a great opinion here. I'll skip it. Euro yen. There's nothing jumping off the chart at me, Ash, I've got to say.
No.
Euro pound. People just got to stop. Hang on. This is interesting. This is interesting. Let me do a little bit more work on that 4-hour chart. Don't really like that we're coming off the top of this channel, but I'm thinking long here. And there's a great target area right here. And a good area to bounce off after consolidation. Okay, I don't mind this, Ash. Finding an entry is the tricky bit. You know, years gone by, I would just have placed an order here with a stop here. But I need a bit more than that. And I don't really see it just now, which is a shame. Let me drill down just a little bit deeper. I can't see it. I could use this, or I could use this. But at the moment, I just can't jump in here. What I'd like to see is maybe that level there. So price break the trend line, consolidate, get back above and retest it. Then I can go. See, what I'm really saying here is this is a good indication that there may be a bounce at this level. There may be a reversal. But it's only a may. It's not a will. It hasn't been confirmed by anything other than we've got a tweezer bottom sitting at really a place I'm not that fussed on. But it may be an early warning signal. And if I get the secondary, and the secondary will be perhaps that false break, perhaps it's a low test bar over here. I'd need to have that secondary before I could actually jump in here. But I do like the fact that we've got an early warning, perhaps. EuroCAD's too far gone, not even going to look at it. A Euro Aussie I will be interested in because two reasons. One, I've got a bearish outlook on the Aussie, and two, I've got a bullish outlook on the Euro. So, you know, there would be a very brave trading that bar there, not something that I would even consider. But again, if I were to get a back up over here somewhere, so a higher low, then I've got a chance. But I won't trade the first bar. I've got to wait for the second. And at this point in time, it simply isn't there. I'll have a look at dollar yen. that was a bit interesting because we've come back into the range, but we've also hit the daily pivot. What's that telling me? Bull bar. Yeah, a little higher low there. Not that keen on it. My bias here really is short because we're now back inside the range, but we've bounced straight back out of it, which is interesting. What I would need to see here is price get significantly below the daily pivot and then retest this line here and the daily pivot. If I were to see that, then I can trade short. To trade long, what would I need to see here? I don't think I'd like to trade long here, to be fair. Maybe if that broke, but then I'll be trading straight into the high of the day, which I don't do. I could use this one. That's probably the only way I can get long here, is if price breaks down below the daily pivot, finds support, hits the backside of this one, gets back up to here, then gives me a higher low. That is about the only way I can see forward there. I've purposely missed Aussie CAD, and the reason I purposely missed Aussie CAD is because I'm really unsure where the CAD's going at the moment. There is CAD news, is there not, this week?
Yeah, there wasn't there? It's quite a lot, actually.
Tomorrow, only lowbrow stuff, but we've got employment on Friday, and what's that's tipped to be? Well, unemployment rate climbing to 5.7%. That won't be good if that happens. And employment change down to 6,500. So you got to be thinking the CAD's not going to be that strong. What's oil doing? Oh yeah, we know what oil's doing. Yeah, that's a bullish bar, but we are at the top of this range. That's why I can't get a handle on the CAD. Because we're at resistance, I suppose I've got to be thinking CAD weak. CAD weak, but Aussie coming off it. Nah, I can't do it, mate. I can't line those up, I'm afraid. So there's nothing there at the moment, and looks like scalping was the only way to get into this Aussie. And I'm concentrating heavily on the euro. So looking for a reversal on the euro, or certainly a reversal of momentum, and well, it's nearly trend, but it's not trend yet for mine. I'm looking to trade in this area here, long the euro, but there's nothing there for me right now.
So it's just a wait and see for now.
Yeah, or scalp, and you know, scalping can easily go wrong. That's the issue. But you would have felt that there's a strong chance that this is going to correct itself, because it really has rallied for no reason.
Yeah.
But timing, and where's the signal? I haven't got the signal. It's just not there.
No. Well, you just have to wait for something clearer. I mean, I feel the same about the FTSE, mate. The FTSE's taking off right now, which is fine. Actually, world markets are doing pretty well. The DAX is up around about 7 tenths. See, the CAC is up about 5 tenths. Italy, which we were discussing, is up around about 7 tenths, and the FTSE about the same. So, yeah, some pretty decent boosts up in the market today, which, as I say, is no bad thing, as it draws towards the price that I'd like to get in at. Do you want me to cover the reasons for Italy and the story there?
Yes, please. Yeah.
Yeah. So we had a populist government in Italy. We have a populist government, and they had told the population of Italy that they would be cutting taxes, lowering the retirement age, and they're having a universal basic income. So that, they were promising that the people were going to be getting a lot more money, but the issue that for all this was that it was based on a lack of finances. And obviously, everything's controlled by the European government and the European Bank, And when they took their budget proposals to the European Parliament, the EU said, no, you can't do that. You can't afford it. You've got all this debt that you've got to start to pay off. And there's absolutely no way that we are going to allow you to be irresponsible. And, they got a bit of a scolding from the EU, and that it wasn't in line with the fiscal rules from the EU. And Italy's populist government, they stood their ground for a little while. They were bashing heads. So there's already some disharmony between Italy and the EU, and I think this particular government would probably quite like a referendum on remaining within the EU. After the bitter fight, the EU eventually won, and it meant that we started to see the Italians fall into line. Now, since then, we've seen Italy go into recession, which I know that you know that anyway. We've had two consecutive months of contraction, and they are now into recession, and their banks are in a lot of trouble. As I say, Germany are hugely exposed to the Italian debt crisis, which it is a debt crisis. So, it's certainly, as soon as you see those 2 months of contraction, it does become a bit of a crisis. So they're exposed. France are exposed. UK are exposed to a degree. I think it's, as I say, 17 billion euros, which is a drop in the ocean when you consider that Germany have around about 53. You've really got
heavily exposed.
Yeah, and you've got a government in Italy which are against the measures that are being imposed on them, and they are also against the EU, generally speaking. So this will probably, I'm going to have to say probably, because as I said, I've got it wrong with Greece, but this will probably raise its head at some point this year again. And I think those Italian numbers are going to be watched much more closely than they would be normally. And back to but before, when we were talking about previous recessions, this is something else which we haven't really considered, and that's the fact that we do have this block now in Europe, which are so closely and closely tied and linked together. So anything that happens from here could just be from one country defaulting, one country deciding that they are going to leave, one of the inner countries in the actual Eurozone. The UK was never in the Eurozone, it was only in the EU, but one of these countries in the Eurozone deciding that they would leave, and it may well whip the carpet from under the feet of the whole project. So those numbers will be watched. I'm not sure whether it's going to turn into a geopolitical aspect or incident, but certainly when it comes down to the economics and the finances, it only really takes one of the nations, one of the big nations as well, one of the big players, to be in difficult times. For there to be
have they gone cap in hand to the ECB or back to Germany, or what have they done? Not fighting their way through it.
Yeah, they've. They had to take the directive from the EU. They had to sort of like effectively say, okay, well, we will fall into line, because the European Bank won't give them any more money if they don't fall into line. And that's the thing about not controlling your currency. While the ECB controls the whole thing, effectively Germany, if you like, then all the other countries really kind of fall under. They have to fall under the umbrella and play ball if they want further fiscal stimulation. So I think right now they're having to take and swallow the bitter pill, which is exactly the same that happened in Greece. But we haven't really seen it fully play out. All we know right now is that their economy is contracting. So they have to do this. They haven't really got too much of a choice unless they leave the EU and go back to the lira. That's the only other. But that means defaulting on all of their debt, which is not wise for any country. You know, I know that there are people saying, I've heard people saying before, you know, why wouldn't you just default and go back to the start? Well, the reason you won't default and go back to the start is that means that you are at loggerheads then with Germany. You're at loggerheads with France. You're at loggerheads with the UK. You know, Portugal has got some Italian debt. You know, so there's a catalogue of countries that you would effectively be turning your back on. And that in itself wouldn't be a huge issue if they weren't the countries that you do most of your business with. So, you know, so it's not really an option. It's not an option for them to do that unless the rest of the world, which they'll never do, says fine. You know, let's just start again. Germany aren't going to do that. You know, not with the amount of debt they hold, because somebody's got to absorb it, haven't they? And ultimately, if the Italians that got themselves into this mess don't absorb it, then it's going to be one of the big guns. So they just won't do that. They just won't do that. You know, this. You know, when you look at where all this money goes, you know, where world debt is held, and you know, how it goes from one country to another, and all the borrowing from one country to another, it kind of turns, you know, it sends your head dizzy.
It does, doesn't it?
Yeah, I mean, you wonder who's, and it's not who's sitting on most of the debt; it's on who's sitting on most of the dangerous debt. Is the issue, because somebody that's right at the top of the tree could fall, you know, could soon find themselves, you know, falling pretty heavily if the country they hold the most debt of decides, you know what, we're not playing ball on this, and it only really takes a populist government to maybe do that. You know, as I say, they're playing ball right now, but they are a populist government, which means that they are going to try and affect and protect their own nation. But they've obviously done the calculation and realised that maybe this isn't the way to do it right now. You know, pulling them out of the EU.
Playing with fire there by the very notion that I just spoke of before, where that domino effect on subprime mortgages caused
absolutely
caused our global financial crisis. Maybe sovereign debt causes the next one, if there is to be one. I'm not predicting
absolutely that. Yes, yeah. I mean, who knows what's coming? It's the thing, isn't it?
Indeed, absolutely. Well, I've got no trades, mate, at the moment.
No.
And not likely to have any time soon. So I'm good to go when you are.
Okay, mate. Sounds good. Yeah, I'm in the same scenario as you. I'm just going to wait for the market just to ease itself up again, that little bit higher, and then we'll think about taking trades at some point. But you know, as I say, any of you that's sort of, you know, keen to trade, if the market doesn't behave in the way that you need it to, and as I say, it's not that there's not money out there, but if it doesn't behave in the way you need it to, it's best just to ignore it. So that's what I'll be doing, and that's what it sounds like you'll be doing too.
Yeah, no, I won't be ignoring it, because I'm real keen to get long the euro against pretty much anything at the moment. So I'm just waiting on signs of reversal and confirmation of that, and then I'm good to go. That may take a little while, but that would be what I'm looking for. Euro Aussie in particular, but that's starting to go, so I need to pull back on that. Couldn't get into the Aussie shorts. Euro dollar's now in the go zone. It's exactly where I want it to find it along. So I'm hoping that I'd like just a little bit lower, maybe another, right down to 114. We're about 114.13 or something at the moment. I'd like to see that down around here, and then look for the long. And as I say, that's true of every cross on the euro. I can't think of any cross that I wouldn't be willing to trade long at the moment.
Great.
Long against, that is, with the euro as the primary currency. Yep.
Okay, mate. Sounds good. Any other TTR today?
No, mate. That's it. That's it for today. There's nothing else on. It being Chinese New Year, so have the afternoon off, mate.
Great. Sounds good to me. All right.
Happy days.
All right, mate. Yeah, enjoy it, and I'll speak to you tomorrow. Same trade time, same trade channel.
Happy days. Have a good one.